Hello and welcome to the Miko Bits show, and I'm your host, Miko Bits. And today we have a great show for you, which is Origin Protocol's co-founder, Josh Fraser. So we're very excited because they've announced a pretty innovative stable coin that actually allows the user to collect interest called OUSD. Very excited to talk to Josh about this and other DeFi developments at Origin. So important to note that this program is an opinion and entertainment show. It's not investment advice. So definitely seek a licensed professional if you want investment advice. Before we start, if you're interested in Bitcoin and blockchain, please consider clicking that subscribe button and also click the bell so you can get notifications about future videos that I might post. Thank you. Okay, without further ado, it's Josh.
Hey, Miko. Thanks for having me on the show.
It's great having you on the show. Long time, big fan. Obviously, full disclosure, my fund, Gumi Crypto's Capital, is in fact invested in Origin Protocol. But those of you who know me know that that's not like a big way of, I'm not shilling anything here. I think one of the things I'd love for you to jump into is, talk a little bit to me about kind of the origin story behind this OUSD product. I mean, it's very exciting.
Sure. So we started Origin in 2017, and we started with peer-to-peer marketplaces. And so we launched a marketplace on the Ethereum blockchain that allows people to connect in a peer-to-peer manner. And so we've been working on that for the last 3 years and growing that product. And we've always had in the back of our minds it'd be interesting to do something around the stablecoin. But we never knew what we could do that would be better than the existing players until recently. And Tether is huge, right? There's millions and millions of people who are who are using Tether. It's great. People, cash out to Tether at the end of the day, but when traders want to go to sleep at night. But the problem with Tether is that it's just sitting there. You're not making any money while you're sitting in Tether.
Yeah.
And as we saw the explosion in DeFi this year, we realized there was this opportunity to create a stablecoin that's actually more useful, but it's just as easy to use for spending, just as safe to hold in your wallet. You can have self-custody. You don't have to leave it locked up somewhere else. You hold OUSD in your wallet, and it earns a yield for you at the same time.
That's super exciting.
Yeah, so that was a big innovation, taking sort of inspiration from multiple different places. From Yearn, we saw Yearn, what they're doing with the vaults. You lock your money up, it automates the process of yield farming. We thought that was cool, but again, you have to lock your money up. And we said, what if you didn't have to lock your money up? What if you could actually earn a yield with it sitting right in your wallet? And for inspiration on how to do that, we looked at AmpleForth and the way they do rebasing and how you can actually change the supply of the token and actually update balances in people's wallets. And so it's not like AmpleForth and the way the price yo-yos up and down like crazy.
Yeah, rebase coins.
But we can use the same technical mechanism for distributing that yield.
Yeah. So that part, I listening to what you're saying, like that was the beating heart for me, and that's what kind of caused me to really reach out. And I really want you to share this mechanism, right? Because one of the things that's so interesting is that there's a cause and an effect here, right? And the effect is that you're hanging out and you have a stable coin, right? But the thing that's fascinating about the stable coin is that the number of stable coins that you hold goes up on its own, right? Like, based on the yields, whatever yields, you're able to provide, right? So the thing that's fascinating about that mechanism becomes like, how does it do that? So the thing that caused my light bulb to go off when I was questioning you was about kind of gas prices, right? Because obviously if you're sending so many little microtransactions, you're going to pay infinity dollars of gas and the whole thing will fall apart. So tell us about that, because that was the thing that made me excited.
So from a user experience, it works similar to a savings account. When you have a savings account, the value of a dollar doesn't change, but you have more dollars show up
Relative
in
to
your
the
account.
dollar.
Yeah. So OUSD works the exact same way, right? And how we're actually doing that on a technical level is we're actually overriding the balance of function on an ERC20 token. And internally, we're tracking percentages of how much of the pool, the shared pool that each individual holds. But then we do some fancy math to calculate what that means in dollar terms. And so we can calculate the total value of the pool and then update everyone's balances. And this is just when you call the balance of function. So we're not airdropping it to everyone. We're not having to do anything that's gas, like extortionately expensive on gas. But we're just changing a couple factors inside the smart contract itself so that when people call the balance of function, it gives an updated value that represents your percentage stake in the pool multiplied by the total value of the pool itself. And that gives you your balance.
So this is like black magic, right? Like, it's so the thing that is confusing to me. So a couple of things. Okay, so one thing is like but in terms of like the actual balance, like here's an example: is could you use the mechanism to decrease the amount that someone's holding?
So it can actually. Your balance can go down. And so first, it's important to understand how OUSD works.
Yeah.
So first of all, it's backed one-to-one with other stable coins. So you can upgrade your Tether, your USDC, or your DAI into OUSD. So you can take a boring stable coin and convert it into an interest-bearing stable coin called OUSD. And you can do that on our DApp. You can buy it anywhere. You can buy it on Uniswap, coming soon to centralized exchanges as well. And all you have to do is buy it and hold it to earn that interest. What's happening behind the scenes is we're taking those stable coins that you've upgraded and we're deploying them into other DeFi platforms to earn a yield. So we're putting them on places like Compound or Curve. You can imagine we can do this on Uniswap or Aave. Lots of these different players in the DeFi space, we can actually put your capital to those stablecoins to work. And so because we're backed one-to-one by those other stablecoins, if there's a collapse of any one of those coins, then OUSD is going to feel that as well. So you're getting a little bit of protection just from the diversified basket of assets. But if Tether drops to 50 cents, OUSD is going to take a hit as well. And that would actually show up in the rebasing function. So that would, your balance can go down. The difference is it's not expected to, right? If all systems are operating as expected, your balance will only increase with interest being accrued from basically 3 different strategies. So one is lending. So that's your Compound, Aave or DYDX, or on trading fees. So that's your second method with things like Uniswap or Curve or any of the forks of those platforms. And then the third way is liquidating the rewards tokens. And this is obviously a huge part of yield farming today is, if you're on Uniswap, you can mine Uni. If you're on Curve, you can mine CRV. If you're on Compound, you can mine the comp tokens. And what we're doing behind the scenes is we're actually liquidating those for you automatically and then converting it back into the underlying stablecoins. So say we get some comp tokens, automatically convert it back into Tether, redeploy that back into another protocol to continue earning yield. And so that allows us to have, since we're dealing entirely in stable assets, we don't have that risk of volatility of the price moving around too much.
Wow.
Does that all make sense?
It does. It makes a ton of sense. So I guess the question then becomes about like looking at it more from a blockchain perspective, like, how do you deal with kind of spending, right? So, the idea becomes like, let's say I want to make an on-chain exchange, right? So, let's give a trivial example. Like, let's say I put in 100, I got 100 OUSD, right? And then over some period of time, I end up with 101, right? Whatever period of time that would be. Okay, so now if I want to spend, like, obviously the balance of statement will record 101, but like what happens when in terms of reconciliation?
Yeah, so when you send OUSD to anyone, it's just as easy as sending Tether. So gas costs are the same. It's not expensive to send this. So just to have a clear example, I can send you $100 of OUSD. The minute it lands in your wallet, it starts earning yield.
Amazing.
So you'll check your wallet, say a month from now, and you have $101 in your wallet. And then you can send $20 to someone else, and the minute it hits their wallet, it starts accruing yield for that person. And so when you think about it, this is like a superior stablecoin, both for holding and for spending, because you don't have to pay these expensive switching costs to move back and forth between interest-bearing and non-interest-bearing. And it's actually a problem I run into in traditional finance world as well, where I always want to have like all of my money invested. I hate just having it sitting in Bank of America, not earning any interest for me.
Yeah.
So I always want to have my money at work, but then I send it off to, put it into equities or put it different places. And then there's this huge cost to like unwind it all, right? Of like, you got to sell it, you got to take the tax hit, you got to wait 3 days for ACH to transfer it back to your account. And so we're sort of solving this in the crypto world. We have the same problem in crypto, where it's like you want your capital to be deployed and put to work, and you also want to have it freely spendable so that you can do interesting stuff with it. And OUSD removes that switching cost. You don't have to pay $100 of gas fees to enter and then exit this pool. You just hold it, spend it, use it, and we think that's a pretty novel breakthrough in this space.
Yeah, I totally agree. I think it's beautiful. I think that from a kind of user experience perspective, you've solved some really interesting problems, and I think it's fairly exciting. It's an exciting development. I guess the thing that kind of this really causes me to think about, though, is like at some level, the thing that's fascinating is that from a yield perspective, like this is really impactful to things like Tether, right? So ideally, and things like USDC, right? So ideally, like the thing that happens that's fascinating is that, people who are operating those things should come towards OUSD seeking yield, right? So in a sense, like, this may be the wrong terminology to use, but like in a sense, there's sort of a vampirism, right? In a sense, you're basically saying, well, here are the old tokens where there's no appreciable benefit or reward, and now we're just providing the same functionality, only there is a benefit or a reward. So how do you think about that?
Yeah, absolutely. We talk about it as upgrading your stable coins, and that's really how we think about it. But you're right. I mean, these other stable coins are far ahead of us on both integrations and just brand, and they're accepted everywhere. And so we have a lot of work ahead of us, no question, for us to be able to go get all those same integrations with all the different wallets, all the different exchanges, all the different custody providers, because we really want to make Origin Dollar ubiquitous. It needs to be as easy to transact with as Tether. And so we've got a lot of work ahead of us, but that's our vision, is like we want to be accepted everywhere that these other stablecoins are. And we think is really compelling for everyone who's in crypto, and also people outside of crypto too. Like, look at the interest rates you can get in a traditional finance account. It's like 0.2, or if you're lucky, right? I mean, it's nothing. So we think this could be really interesting for people who are just getting into crypto as well, and people who are sort of comparing the rates to traditional finance. There's huge opportunities here in DeFi.
So here's a question: are you considering adding potentially an additional mechanism? Because here's my thought process. My thought process around this is that one of the things in DeFi that really causes engagement is mechanism discovery. right? And what happens with this, and thinking about it from the perspective of engagement is kind of more of a gamification mindset. But like the thing that I'm kind of thinking is this, right, which is that you've elucidated like a very powerful mechanism, essentially cribbing from this balance update mechanism in AmpleForth. So the thing that kind of raises the question would be, given that there are a number of ERC20 based stable coins, they could potentially implement something similar, right? Obviously, it would change the fundamental nature of their product. So it would, as a diversified financial service, it might be ill-advised for them. But they could launch a parallel product, right? So for example, like USDC could launch something like USDI, and say there's interest or something like that. So I guess my question would be, like what's typical in DeFi, are the things like the invention of like C tokens or the invention of like additional mechanisms. So are you kind of thinking about additional mechanisms?
Yeah, I think most where we're focusing is like the adding new strategies on different ways to put your money to work. And then figuring out what's the right risk profile for this basket of assets. It's really important to us that OUSD is a fungible token. We don't want to have multiple tokens you have to choose between, here's a low risk origin dollar and here's high risk origin dollar, here's medium risk origin dollar, here's this ball or bat pool. Like we don't want any of that.
You need an OUSD. Sorry.
We just want to keep it simple, right? And make it really, really easy.
And an XOUSD.
And XOU. Well, so I think someday we want to do like euros and yen and these other currencies.
Yeah, that's nice.
That makes a lot of sense. But what this means is that like we have all these different strategies on how we can put your money to work, and each of these different strategies comes with different risks, both smart contract risk, counterparty risk, system risk. And so we need to figure out the best way to manage that for the holders of this coin. And so, of course, that leads to governance and what's the appropriate way for the actual holders of this token to actually be involved in that decision, actually decide for themselves what kind of risk profile do they want.
I'm super excited about that. I was actually going to go there, which is like, how do you see the future of governance of OUSD, right? Because obviously, to me, the thing that's really interesting about this is that, there isn't an FDIC. So like, in some sense, like you're talking about something where there's sort of a management, right? Which is that you're effectively managing the assets and providing yield that way, right? Now, obviously, you're doing it through fairly stable, well-respected mechanisms in DeFi, but like it's still has a quality of being DeFi and therefore somewhat speculative. So I guess my question would be like, what's your vision are you envisioning a future decentralized OUSD mechanism? And if so, will there be a governance token, or, how do you see the governance mechanism?
Yeah. And so to be clear, today we're not managing it. We wrote some code and then everything is governed by the smart contract itself. So we're not making any sort of management decisions. We're not taking custody of the funds. All of this is being handled in the smart contract itself. We write the code, we deploy the contracts, but then the contracts, execute the plan for how those assets are allocated.
Got
it. Over time, we want to hand over even more responsibility to the community. And have them adding new strategies and then deciding how much risk they're comfortable with. Do we chase the highest yield opportunities? Do we make this a super safe, boring type stablecoin? Is it something in between? And that's something that we want our holders to decide, right? What is the most interesting risk profile for this? And that's something that decentralized governance is something we're moving towards. We have a lot of the sort of the architecture in place to make that possible. And so today we have a 508 multisig, which is the owner of the contracts. In front of that, we have a time lock. So that way, people, even in this period where we are deploying the contracts and having a little bit more control over it, while we're still testing and making sure everything works as intended. But even in that time, you have that time lock. So you can see we've queued up an action, but it won't actually take effect for, it's going to be 48 hours once we update the time lock. And so you have 2 days to get your money out if we do anything that you don't like. And so that's really important, is that even in this period where we do have more control, we still have full transparency, and you have that time to opt out if you see anything that you don't like. Going forward, we want to hand this over to the community and have a community initiating proposals and actually voting on the different strategies that are employed in Origin Dollar. And we're looking forward to sharing a lot more details on exactly how that's going to work in the near future.
So do you see OUSD as a one vote per OUSD construct, or do you actually see the introduction of a novel new governance token for this process?
We'll be sharing more details about that soon. We haven't announced exactly how that's going to work. I think in general, the principle it's interesting me just to sort of general comment in the industry is that people are introducing these new governance tokens.
Yes.
That determine the outcomes for this pool of capital. And if you think about it like what the ideal scenario is that the capital, the people who actually have capital would be making those decisions that impact their own capital, right? Not some holder of some random token.
Yes.
So I think that's something that we're thinking about, and like, what's the right way of designing a governance structure where you don't have this risk of someone with nothing at stake coming in, buying up a bunch of governance token on an exchange, and then coming in and stealing this huge pool of capital that they're not a part of, right? And I think that's something I see in this industry, is that people are, there's a disconnect between the governance token and the actual capital at stake. And I think it's something that needs to be thought through a little bit more on how you can actually have the people whose capital is at stake actually participating in the governance itself.
Yeah, but one can sympathize with the emergence of these kind of arbitrary governance tokens. I think you could kind of launch the governance token kind of birthday to the date that Andre Kranya tweeted out that like this has no value, right? So I think that was that was the birthday, and then ever since then, like these no value governance tokens have kind of gone bananas, right? But to me, the thing that is a problem is the weaponization of network effects in these early stage projects, right? So someone could launch a vampiric attack against OUSD, so I could launch a QUSD that's basically a clone of everything that you're doing, but with an independent governance token that can be valued, right, on Uniswap, right? So if there's price discovery on Uniswap for my governance token on QUSD, then I'm exactly the same thing as you, except for an additional reward mechanism, right? So then I'm sushi swapping you, like you're Uniswap, I'm sushi swap, and I'm like vampire attacking you. So that's bad, right? In other words, like you have a very laudable goal, but because of these vampiric mechanisms, like some wag like myself could come along and like make a QUSD or whatever clone, vampiric clone, and that would be a problem.
Yeah, I mean, this question's come up like since we first started Origin, where people are like, all your code's open source, it takes one click to fork it. How are you going to have a moat? How are you going to protect yourself? And, the answer we gave back in 2017 is the same one I'll give today, which is, it takes one click to fork our repo, but we've got 500,000 people in our community, and they're a lot harder to fork. And I think we're seeing this play out with some of these vampire forks that we've seen, right? With whether it's SushiSwap forking Uniswap or Swerve forking Curve. Yes, they were successful in the short term of stealing a lot of capital, but it's largely gone back, right? You look at Swerve, they got to, they stole $1 billion worth of capital, and they're at what, 40 million or something like that today. And so, it can work for a period, but at the end of the day, people want to come back to the team that's been working for years, that's got their names out there, but it's willing to sign their work. All things being equal, that's who you're at least who I want to trust, is someone who's willing to sign their name to it, that has actually been putting in the work for the long term. I'm going to bet on that team every time over, someone who spent a week forking it and adding another token. I think people are starting to get sophisticated enough that they understand the difference between the first and the second.
Yeah, I agree. I mean, I think that obviously, the degen movement and kind of this gamified DeFi, is full of kind of like pseudonymous and anonymous characters. And, I think that, a number of folks have been rug pulled. So, it doesn't necessarily feel like a long-term thing, right? And I think that, it does become this kind of game of kind of fast dumping game, right? So we are seeing kind of the result, the tail end of it, and I do think that long-term investors and people who are, trying to prop up this space properly by adding value to the ecosystem, I think that is a thing, but obviously, short-termness is also a real thing. Time horizon, like time value of money.
Totally. And anonymous teams are fine. Like our friend Satoshi is anonymous. And what I like about anonymous teams is that it forces you to evaluate the product for itself with no bias. You don't know who's on the other end, who the creator is, right? And so all your biases and all your isms, right, or your racism, your sexism, all of that stuff is completely mute. Because no one knows who published it. And there's something cool about that. The only thing is you don't have a right to say, trust me. If you're not putting your face on it, if you're not, willing to have a reputational hit from a rug pull, then you don't get to say, trust me.
Yeah, that's pretty salient, right? Like, I mean, I would rather receive investment advice from Blue Kirby than from John McAfee, for example. So I think your point is well made. But at the same time, I did find myself on Twitter getting into, like, I felt actually pretty self-stupid after doing this. My IQ maybe dropped by 10 points, but I got in an argument on an anonymous kind of, appeared to be some kind of weird starfish character on Twitter, because they made an assertion that DeFi was not going to be regulated. And they were like, don't worry about it, it's not going to happen. So I started arguing with them, and after a couple of tweets down the line, I started being like, why am I even bothering with this? This is really ridiculous. Like, it's like, this is a cartoon character, like that shouldn't be a thing. But it's great. It's great to kind of see this level of innovation. I mean, for me, the thing that I'm excited about is if you look at the evolution of a lot of great products are the result of time in market with good teams, and when I think about your origins, not to put a pun on there, it like this idea of a marketplace and the idea of kind of doing commerce, it always harkens back to the kind of history of like Laszlo buying a $10,000 Papa John's pizzas. He got. I always like to tell people that he got 2 pizzas, right? So it's actually not as bad. It's not as bad as it sounds.
50% better.
Yes, it's vastly bigger. Right? So, but my point that I like to make though is that what you're doing in some ways is that coming from that background, you're also kind of contemplating this idea of volatile assets being kind of a drag on commerce, a drag on transactional activity, right? So the question that's so interesting about the design of OUSD for me is that it's something that has a really novel quality of both a hybrid kind of like stable e-commerce mechanism, but also one that kind of produces yield using this kind of very novel mechanic. So I'm very happy to see, this is stuff that you're not going to be able to see without really in-market innovation. So really appreciate it. It's so interesting to see.
Yeah, and that background really is how we got excited about stablecoins. We're trying to build marketplaces for people to buy and sell anything, and sell. In one case or the other, either the buyer or the seller is going to get screwed. We're trying to, if you're doing like an Airbnb type marketplace where someone makes a reservation to stay in your apartment a month from now, I don't know if the price of Ethereum is going to be higher or lower than it is today, but it's certainly not going to be the same as what it is today. And so someone's getting screwed. And so this is really where we started thinking about stablecoins. Like, we want all of the benefits of cryptocurrency. It's fast, it's free. You don't have to wait 3 days for it to transfer. It's instantly global. All of these benefits of crypto are great, but we don't want the price to fluctuate all over the place. And so, today more value is transferred on Tether than on Bitcoin, which is just mind blowing to me. But I think it speaks to the size of the opportunity here. What we're doing with, and by the way, what we're doing on marketplaces and e-commerce is still going strong. So our D-Shop product is continuing to grow. We're adding more and more partners for that. People are running.
That. Tell me a bit more about that.
So we have D-Shop, which is basically think of it as a decentralized Shopify competitor. It's running on a completely decentralized stack on IPFS and Ethereum. And you can run your own store, and lots of people are doing it. If you want to see a quick example, you can go to store.brave.com. They're using it to sell a bunch of merchandise, and you can see how that works. And you can pay with BAT or any stablecoins, or OUSD is now accepted on all of these stores. And so we have hundreds of these stores that are now accepting OUSD as a payment method. And as a merchant, think about what you're used to. You're used to paying, 2.9% and 30 cents of credit card fees every time someone makes a transaction. And now with OUSD, we've flipped it. So instead of you having to pay a fee to receive money, now the money shows up in your wallet and you instantly start earning interest on it. So as a merchant, it's the ideal currency that you would, who wouldn't rather be paid in OUSD than a credit card. And so for anyone who wants to sell stuff online, this is a much easier way to receive payments, especially if you're selling to a crypto audience.
I love that. So pre-OUSD, like what were the chief selling points of using your system as opposed to using something like a Shopify or using something that's more traditional?
Yeah, so one of the first things is just the fees, right? So most e-commerce platforms like Shopify take huge fees from the merchants. Our platform is free, it's open source, anyone can use it. Second thing is just censorship resistance. We've seen lots of different stores get banned or shut down. They have strict rules around what you can and can't sell. And since ours is open source, it's running on the blockchain, there are no limitations on what you can do with that code yourself. And then it's instantly global. So you've got 2 billion people on this planet who are unbanked, and we can serve all of those people. People can buy and sell in a global market, and all you need is a smartphone, and you can have access to buy and sell with people anywhere in the world. And so these are the things that really differentiate our product from the other players that are out there in the market.
That's exciting. And what I'd love to get are maybe some numbers if you're willing to share. Like, I'd say that I'm interested both in the kind of e-commerce merchants numbers, and I'm also interested in kind of understanding numbers around OUSD if you're willing to give us a peek.
Sure. So we have hundreds of stores that are running D-Shops. We've got a bunch of logos on our website. You can go to dshop.originprotocol.com. You can check that out. You can see some of the live stores we have. We're working with a lot of big players in the crypto space. A lot of names you would know. People like Brave, like I mentioned, yep. Or Kyber, Solana are running their store with us. So a lot of household names, particularly in the DeFi space, and there's a lot more in the pipeline that are coming online soon. So the team is cranking really hard and making really good progress on both all of the features of making it just as powerful and easy to use as any of the competitors. Actually, I'd argue is better and faster and easier to use than a lot of the competitors. And one thing that's worth mentioning as well is we also accept credit card payments on DShop.
Right.
And this was like a big, we sort of struggled with it a little bit because it's, we're in crypto, our whole thing is crypto. But for so many of the merchants we talked to, even crypto companies, they said we have to be able to accept credit cards.
It's the right decision. Yeah, very, very good.
So we see that, and that made a huge difference, and it's made it a very viable platform for people who want to see crypto be successful, who believe in this space long term, but are also pragmatic about the fact that today a lot of times it's just easier to pull out your credit card than to open up MetaMask and deal with all of that.
Yeah, that makes a ton of sense, and it's very powerful. And what about numbers around OUSD adoption to date? I know it's brand new, so
it is brand new. I think there's TVL is around $400,000 right now.
Great.
But we're sort of being careful. We're telling people like the contracts have not been audited yet. So we're intentionally telling people to be careful. Please, check it out, play with it, review the code. We'd love for you to buy some and participate, but we're not, we're not quite ready to tell people
testing in production.
Yeah, exactly. Testing in production.
Like Eminence.
Please be careful. Trail of Bits are going to be auditing our contracts this month.
Great.
So we have that lined up, and so once that audit comes back, with 2 thumbs up, we'll be promoting it a lot harder, and we expect our TVL to increase.
Yeah, I like Trail of Bits a lot. I was talking with Dan over there, and like they have a very, very kind of deep and 360 view of like cybersecurity as well as smart contract security. So I think they're very I like the approach. It's very reputable.
Yeah, that's why we worked with them before auditing our marketplace contracts. We're working with them again. They're great to work with. And it's exactly what you said. They're not just Solidity auditors.
Yeah.
They have a much more holistic view of security and understand how all the different pieces fit together. And a lot of times the vulnerabilities come from complex systems or in the UI and the way it interacts with something else. And so they have a really good holistic view of it. We also like the fact that we've been auditing pretty much all of the major platforms in DeFi. And so since OUSD is using all of these money Legos of all these other different platforms, it helps a lot that we don't have to dig in and figure out how Compound works, right? The audited those contracts, they understand it deeply. And so it saves them a lot of time and they can get up to speed a lot faster.
Yeah, I think the systems view is super crucial for something like this. I do appreciate their mindset. So one of the things I really love about what you've done here is it's so interesting to contemplate, right? Because one of the things that has to be contemplated is looking at things like the value of Bitcoin relative to the value of something like USD. Right. And the theoretical construct from our friend Satoshi, who's a pseudonymous guy, is that like the theoretical construct is that, a long term eventually people argue. I mean, at the moment, Bitcoin is, in fact, seemingly or apparently inflationary. Right. But like at some point with people losing Bitcoins, that the rate of minting and the rate asymptotically will approach deflationary. Right. So the point being that if all fiat currencies are massively inflationary and then Bitcoin is mildly deflationary or mildly inflationary or stable, either way, right? What you should see expansion of the value of Bitcoin relative to the value of something like a USD, right? So that's kind of the base thesis around something like a Bitcoin, right? So to me, the thing that's fascinating is what you're providing is a stable coin, quote unquote, but a stable coin that actually pegs to the dollar, but at the same time kind of has this crypto reflective nature, right? That you're actually kind of like absorbing the yield benefit of the greater crypto sphere as a function of this, right? So the thing that's so funny about it is that you get both properties, right? Because the thing that's so funny is that if you have a so-called stable coin pegged to the dollar, right, in theory, you're actually kind of losing value, right? Like, so, I think it was Jameson Lopp that said on Twitter that Bitcoin isn't a get rich quick scheme; it's a don't get poor slowly scheme, right? And
Right.
So it's such a funny and fascinating and beneficial hybrid, I think, that you've created, right? Because the crypto should be, in a relativistic term, right? Because people keep saying like Bitcoin can't just keep going up in price infinitely, and what I keep telling them is you're using a ruler that's shrinking. So if you're
Right.
if you're using
Right.
the dollar as a ruler, so if the ruler keeps getting smaller
Right.
and smaller, the object you're measuring will appear to be getting larger infinitely. And it's kind of like, no, that's not actually what's happening, right? So the thing that's so cool about OUSD in my mind is that you've captured the energy of this expansion, because it's really just the expansion of having a counterweight to government money printing. Not to be a Bitcoin maximalist, but just giving you a sense of like a different way of looking at the achievement.
I love exactly how you described that, right? I think it is one of the cool characteristics of OUSD is it gives you a little bit of protection against inflation. It was sort of an irony of launching a stablecoin, a US denoted stablecoin, is I'm not particularly bullish on fiat and dollars right now. How could you be when the Fed is printing trillions of dollars like there's no tomorrow? And so, that being said, there's still a huge use for Tether, right? There's still huge use for dollars. And so the question is like, how do we have the utility of a US dollar-backed coin, but have those protections against all of that incoming inflation? And I think you hit the nail right on the head. It's not that it's not necessarily that the price of Bitcoin's going up. It's that we're measuring it in devalued dollars.
Yeah, so I appreciate that, and I think the thing that's super interesting to contemplate too is when you look at the Fed Open Market Committee and what Powell has been saying is he's consistently been saying that we're going to hold the prime rate at zero, right, until we see 2% inflation, right? So he's actually he's asking for it, right? He's like, I want to see it, and we're not. Like they're not going to leave until they see the inflation, right? Like right, like that's what they want, right? They're begging for it, right? And given the context of the banking system, that's what they should be doing. I don't begrudge them that. But that being said, then what we should contemplate is that something like a 2%, like a risk, like. You could almost look at it as a baseline risk-free 2% yield, right? Now, I realize it's a little sketchy for me to be saying, but I'm going to claim that effect over time should produce a risk-free 2% yield, right? I mean, maybe being a little bit facetious, right? Because obviously there's all kinds of risks that aren't factored into that. But what I'm really talking about is like everyone needs to understand the balance between yield and risk, and I think the thing that I like about your approach is that, first of all, like transparency, second of all, automation, but I would also say that, you don't seem to be particularly ambitious about these kind of like, degen yields, and pushing the frontiers of risk with kind of potentially valueless governance tokens. So,
Again, that's going to be up to the community. Right? Yeah. I think it's going to be up to the community, right, on what the right mix is. My guess is that we want our yields to be higher than what they are right now. Right now, they're fairly modest.
What do they look
like? So right now the advertised rate is 2.9% or somewhere, so around 2-3%.
That's fine.
But the actual yield is actually a bit higher because our APY calculators needs to be updated. So we're actually closer to somewhere around 7% in reality.
Wow.
And there's room to get into double digits without having to do anything too crazy. I think a metric for us is like, how do we use audited contracts that have been around for a number of a certain amount of time, that have hundreds of millions of dollars of capital, and that doesn't mean they're risk-free, but it certainly makes me feel a lot better about encouraging, say, my parents to put part of their money in OUSD, and feel good that the building blocks we're using to provide this yield are probably pretty safe strategies.
Yeah, I mean, I think the thing that is always it's always relative. Yield is always relative, right? So, I mean, if you look at if you look at the yields that you're describing, like they're fantastic because you have to compare them to things like United States savings account, and obviously like there may be FDIC insurance or not, but like, at the end of the day, like your bank isn't going to give you anywhere close to that. And, Tether is not going to give you anything. So like, it's infinity, it's infinity percent more yield than Tether or USDC. So like, it's a thing. Like, you should deal with it. Deal with it. So that's the way I would say it. So I don't think you should be, going all degen with this thing.
Yeah, I think number one, we don't want to lose anyone's money, right? That's rule number one.
Yeah.
We for better for worse have a community that trusts us, and we take that responsibility very seriously. We don't want to have people park their money with us and have something go wrong. So it's serious stuff. I think there's a lot of cavalier behavior and among the degens in particular, and I think some of that, unfortunately, people are going to get burned. People have already been rug pulled and sort of learned the hard way, the dangers of just throwing your money blindly into a smart contract that, has been live on the blockchain for 30 minutes and finding out what can go wrong.
Yeah, like eminence. So quick question around the origin sort of token, right? So like how are you viewing that these days, and what do you think kind of the future is with respect to that?
Yeah, I've never been more bullish for origin token and what we're doing for that. We just did a buyback. I don't know if you saw that news, but that was well received.
Wow.
So
wonderful.
it was well received. So we're super bullish on the future of OGN. It's going to play an important role in the governance of OUSD. And so we're looking forward to sharing all the details about that and exactly how it's going to work. But our community's been asking for staking and wanting more details on this. And so all of that's going to be coming out really soon.
Wow. That's great. I'm super excited to hear that. As I mentioned earlier, like my fund is invested in Origin. So, I think
Thank you. Yeah,
of course. And we trust you, and you've been doing a great job. So, really, really
Thanks.
appreciate it. Fantastic innovation. So I'm really excited to try it out, and, look forward to more.
Thanks.
Yeah. Thanks so much.